Hey traders, PSK2329 here with another video, and I wanted to address both long and short-term swing setups as well as how to capitalize on buying weakness. And one of the differences I noticed between somebody who's maybe new to the market versus somebody who's got a little more experience, maybe even more of a professional trader, and how they would attack that differently. So let's get into it. So first of all, I've been asked a lot, what is a good long setup, or how do you identify a long-term setup if you're looking to swing? And we'll do both long-term and short-term, as far as if you're looking to do something just overnight, or if you're looking to do something maybe for weeks, months, days, whatever your style is, there's always setups, there's always plays out there for you. So let's get into it. Here's some of the notes. Here are some of the things we'll be covering. But for a long swing, or even if it's a day or a week or a month, you want the daily chart must be in an uptrend, must be out of a downtrend, and it must be on some sort of upswing or about to break out. And maybe it's even already in a consolidation phase. So for example, let's look at IQ. IQ is a great long-term chart. So for example, if you were looking to swing this and you missed the initial run, you missed, this is a recent IPO. If you missed all of this down here and you're looking to say, okay, hey, when can I get back in this thing? When's a good time? There's a couple things you want to look for. One is, first of all, you want to make sure it's breaking out above any kind of resistance. So let's say you miss the initial move and you're looking to get in around here. You can see this is kind of like an over-under area. This 20 area is a very strong, looks like it was initially resistance, now it's support. So you can see how it's kind of just in this channel here between 16 and 20. You don't want to get into it until you have confirmation that it's ready to break out. So here it had the breakout, pulled back, consolidated, did a little retracement, which is great. That's what you want to see. It's healthy to have that rotation in a stock. If a stock just goes straight up or straight down, that's not good. You don't want to attack that because it's not done. There's going to be another big move in it more than likely. What you want to see here is kind of like this flag style breakup, or this wedge, whatever you want to call it. But it's holding above support and it's just kind of consolidating. You're getting new buyers in, letting some people take some profit taking. And then once it starts to curl right here, either one of these days, you could take a long with your risk being this 20 level. So if you got in at 20.50, you got in at 21, you would immediately set your risk, your stop loss at 20. Because if it breaks below 20, it's now broken the support. It's not in an uptrend. But you can see, even if you just start drawing trend lines and you were saying, hey, I'm just going to keep watching this every day to see when it can get in. You can see, hey, now it's on a nice uptrend. You can even extend the line out to say, I want to ride this as long as the trend lasts, as I'm looking for a long-term swing on this thing. Oh, hold on here. Try it again. No, never mind. Anyways, hopefully you can all see that. But basically, this is now your uptrend line. And you can see it starts pulling away. There is no reason to exit this stock or cover your long or sell your long until it either breaks this trend line or it starts to really, wash out if it has a big one of these days. So when you're talking about what am I identifying in a long-term setup, you want something that's in a nice uptrend, something that's holding support, something that you've gotten in around or near support with a defined risk level, and then you're just going to ride the trend. And then again, you could draw a new trend line, or you can move the trend line, as it's going. Just keep riding the trend as long as it goes. Now you can see where this thing really starts to speed up, but you have consolidation in here. You have consolidation in here. Even with these red days, it was still holding this 28 level support. There's no reason to exit your long yet. It has not shown you a break in the trend. This is just consolidation. It's healthy. It's okay. I can understand how this may panic some people out, but this is what you want to see. This is healthy. And look what happens. It just has a couple consolidation days, moves higher. Couple consolidation days, moves higher. Now you had a big move here. You can see where it starts to speed up. Volume is starting to come in. It's starting to speed up. This is what you want to look for, this speed up. See how the volume is lower on these days? And the volume's just gradually increasing and increasing. The stock's starting to speed up its trend. Now you're starting to talk about a parabolic move. Now you want to start looking at, okay, once I have these couple big days and maybe you're getting some topping or the stock's starting to slow down, maybe this is a good time you want to take half off, you know, because you can always buy back in. And even in these days, if you wanted to take half off and then buy back in on these, yeah, it's going to change your average, but there's still no reason to get out of the long-term position. But when you start seeing these big days and it's starting to make a more steeper incline, you know, we always say stocks take the stairs up and the elevator down because they're going to come down twice as fast or even, you know, more than that than they went up. But again, this is still holding trend. Even this, even if you were long from down here, you know, if you did get all out, that's fine. But to me, this is still an okay long. I mean, it would need to break. If it breaks this 35 and you were down from here, yeah, you definitely want to lock in, let it shake out, let it find support. Maybe it wants to come all the way back down to this level. You know, if it comes all the way back down here, then it's in big trouble. But I doubt it's going to come down that far. But each one of these consolidation days is going to be your next support level. So if it's, you know, if it just kind of holds this 35 level for the next couple of days and then goes back up and retests and breaks out, great. You know, maybe you could add into another long position here and take it as long as the uptrend holds. But this is really what you're looking for. You want something that's on an uptrend, something that's gradually moving up, having these consolidation days. Those are good long-term swing positions. And you can go through a bunch of these charts. They kind of all look the same recently. Look, nice uptrend. If you miss this initial move, you could get in here on these consolidation days. You know, maybe wait. Most stocks are going to have 1 or 2, maybe even 3 consolidation days. You want to see probably at least 2 to have really good, healthy consolidation and then a move higher. But I mean, you can just literally go through chart by chart. And especially with these recent IPOs, I'm just showing you these because these have been hot lately. Oh, sorry. But even this is a nice uptrend. You know, you can take it long here when it broke out above this resistance. Take a long here. You would have had a nice move this day, came back consolidated, almost back prior to around your entry, but still no reason to get out, still consolidating, still holding support, and then look at the next move. If you want to look at something more long-term, like look at Netflix. Look at the move it's been on. Just a straight, pretty much straight uptrend. Even with these big pullbacks. I mean, if you're looking for like long-term IRA type swing stuff, I mean, this would be beautiful. If you would have bought in January at 180, the stock's at 420. I mean, come on, those are huge returns. But you know, you want something that's in a nice uptrend like this, or something that's broken the downtrend, something that's out of a channel, something that's moving up. And even if you do lock in profits, you want to look for where it's holding support and then where it's having another breakout to take another long position. So I hope that helps. Now let's talk about short term. What a short-term swing may look like if you're just trying to hold overnight, or if you're going to, you know, if you're under PDT and you're just looking to swing something overnight. Let's talk about like what Jivo did. The other thing too is you want to make sure you're using your hourly charts, because your hourly charts will also help show you those confirmations of the uptrends. But let's go back a couple days and just kind of take a look at what Jivo did and what you want to look for. So the Gevo obviously had some positive news on this day. On the 18th, stock made a nice move. Stock was at $4. So let's look at the yearly chart. Okay, so you can see this yearly chart is in a nice downtrend. This would be the opposite of a long-term trend. This is a long-term short trend. So if you took this short here, again, there's no reason to cover your short yet. It's not giving you any reason other than maybe this day might have scared you out a little bit. But, that's why you don't swing long-term shorts, low floats. But anyways, Gevo, if we go back and look at what happened on that day, let's go back and look at even the 5-minute chart. This is what I look for if I'm going to swing a long-term or swing an overnight position. First of all, I want to see that it had a nice move for the day. I want to see that if it's the first day, it has to have a good positive catalyst. It must hold 50% of its gains or more. Then you can expect a gap up, ideally with a weak open, consolidate, and then a continuation higher. So if a stock has a nice move like this on day one of the big move, and you can see Gevo went from 350-ish all the way up to where it closed around 13. So huge move. But if you do the math, so it needed to have held at least, let's start over again. So say 350 up to 21. So 50% of that is right around $8.50. So I want to make sure this thing holds at least $8.50. So it needs to hold at least 12 or more for me to consider this still in a bullish trend. And it did. It closed at, right around this 1350 level. And so when you're going into the end of the day and you're looking to swing something overnight and you wanted to grab it closer to the end of the day, as long as this thing's holding a support level, and it's still got about 50% of its gains for a day, there's a pretty good chance you're going to get a gap up the next morning like it did. You can see where it gapped up. Here's where it closed. It gapped up to 15. Had a nice little move up to 1750. Had a little profit taking in here. Even kind of popped a little bit, retested this, consolidated, and then went higher. So this is what's going to happen a lot of times when a stock holds majority, at least half or majority of its gains in that day one move. You can expect this in day two. Now, there's another stock recently that kind of did the same thing. This ABIL. Look at the move it made the other day. So it was at, right around $2, $2.20. Went all the way up to about $4.60. So half of its gains is going to be somewhere around $3. And sure enough, it closed. Where did it close? It closed at pretty much near the highs. So this going into the end of the day, as long as you took, say post 3 p.m., if you took a position into close somewhere in here when it started curling back up, using this 360 as your risk level, or even this 340 as your risk level, there's a pretty good chance you're going to get a gap up the next day because it's holding the majority of its gains. This is day one of the move, and look what happens. It gaps up. Now this happens a lot, and you're going to see this, off earnings winners, off of everything on a day one move with a really strong positive catalyst. This happens a lot. Does it happen every single time? No, but these are some great examples of what it looks like. Most recently, we played this one, GOOS, this Goose. So if you look at the hourly chart, Goose was on a nice, actually the daily looks beautiful. This was a great long-term chart. So if you were in it from, let's say a year ago, if you got in down here where you can see it was kind of coming out of a downtrend, broke the downtrend here, and you can see where it had the big gap up off of earnings. If you took it long anywhere in here, you would just been holding until it broke trend. Here, you might have sold before this earnings. But then look, it just kind of came down, consolidated, and started regaining its momentum. So if you were swinging this, even when it broke this 38 level, if you went long, and usually this is a lot of times what I like to do if I'm going to swing something on a long-term IRA account or something, if it does a breakout, I will wait for it to come back down, consolidate, and show me, get this 2-3 days of consolidation and show me it's going to hold support, and then start watching the curl, then add it to my long-term swing position, my long-term swing account. Because look what happens after it breaks out of these, then it makes its next move, and you can see where it went from 40 all the way up to 60, the 60s on its earnings. I mean, great move. But you can see, okay, day one of its big move, held 50% or more of its gains, had a gap up the next day, had a weak open, which you want to see on a big move. The ideal bullish setup is a kind of a weak open, let some profit taking come down, fill some of the gap that it had formed in after hours and pre-market. Then you can get new buyers in and push the stock higher. Next day, held majority of its gains, kind of had a gap down, which that's okay. It's still day two, but something like this, you might want to see how it opens. Kind of had just kind of a neutral to weak open. Looks like not even much volume on the open on this day. And then just pushed higher. So based on the daily chart, you could see had this big move. You had 3 days of run up, and then you had some profit taking. This day it broke the uptrend. Now it's definitely a bearish chart. But it's still holding this support. So as long as it can still hold 58, I would not be surprised if this goes back up and retests 68. If this thing breaks 58, it's going all the way back down to 47, and probably in a hurry. So, this is actually, I'm going to add this to my watch list for a potential short, but George just set an alert. But this is a great example of day one move, held the majority of its gains, had nice day two continuation, day three continuation, had some profit taking. Now it's starting to come down. Granted, the market has been a little weak, but again, it was in a nice uptrend. No reason to get out until it breaks the uptrend. Now, if you wanted to lock in some profits along the way, there's nothing wrong with that either. I don't recommend just holding these until it does break, but these are some good examples of what kind of chart and what kind of setup you're looking for. If you're just looking for an overnight swing, you want to have something that's holding the majority of its gains. And same vice versa. If you're looking to do a long-term short, you just basically flip everything. It has to have broken the uptrend. It has to be in a downtrend. It's breaking through consolidation. It's breaking through resistance or support, things like that. The other thing is, and this is what I would warn you about, know what you're trading. Read the news. Research the ticker. Understand what the analysts are saying about the target. Understand where the price targets are, because that's going to help you determine not only support and resistance, but what kind of move is left in there. And what I mean by that is this GVO. This is a great example of knowing what you're trading. Day one had this huge move. Day two had another huge move. Then what happened? Stock came crashing back down to reality. So this is obviously not something that you wanted to add to your long-term IRA account, but it doesn't mean you couldn't get a couple good days out of it. But again, you need to know what you're trading. You need to know what's in it. Even this ABIL, do I think this thing is going to 100? Probably not. But, I haven't done any research on it. I haven't even traded this. I just know because I saw it on the gainers. But look at the day two, even though I had the big gap up, the day two really wasn't an impressive day. You had a lot of profit taking. This just looks like an ATM. Look at the volume. You did all this volume the day before, but at the open, it just kind of dumped. So it looks like somebody inside or an offering or something, or warrants got executed. So this is the stuff you have to be cautious of. But there's nothing wrong with, if you're holding something overnight and you're under a PDT, something makes a huge move the first day and you want to swing it overnight, selling it in pre-market, you can always get back in the trade after it's opened. If it's had a week open and it's breaking out again, then you can go long it again and you didn't burn a trade. The other thing is, though, if it pops out of the gate, kind of like this did, had a huge pre-market move, went right up to resistance and then just sold off. If it gaps up and pops, more chances of not that it's going to sell off and it could be done for the day. That's more of a bearish move. If it gaps up, has a weak open, consolidates, gets new buyers in and pushes higher, that's more of a bullish move. So hopefully that will help give you a couple tips as well. The other thing, stay in the trade as long as it holds trend. When the trend slows, take some profits, like I was talking about, those consolidation days, and let the rest ride. That way you've locked in some profits. Now you're kind of on house money. Hopefully you've locked in, enough to cover your initial investment, that you're kind of letting the trade work for itself, and that, you can look for the next setup. But this is another good example. This ABIL, see how it had a nice move the day one, held the majority of its gains, gapped up after hours and in pre-market. I mean, this stuff happens over and over and over and over. So it's a very comfortable trade you can take. Now, I'm not recommending you go in with huge size into the close expecting this, because the thing you don't know is what happens the next day. Maybe next day morning there's some bad article comes out, or negative PR, or somebody does start dumping shares in the morning in the pre-market and the stock just tanks. I mean, you don't know. There's always a risk. So if you're going to swing some, make sure it's something you're comfortable with losing, but also something that, hopefully you've already locked in some gains and you're just kind of letting a quarter position ride. I would not let a full position ride overnight. That's very dangerous. You got to be smarter than that. So the next thing I wanted to get into was buying weakness. And I see this a lot, and there's a huge opportunity when it comes to buying weakness. So you want to identify stocks that have been really oversold. They still have strong fundamentals. They may be down because of some bad PR or bad catalyst, and pulled maybe they just sold off in some profit taking due to market weakness. But the stock still has tons of price target upgrades. It's well below its price targets. It's well below its normal trading range. It's maybe just had a couple days where it's really gotten beat down, and I can show you tons of examples of this, especially lately. So we all know, if you've been trading more than 6 months, what happened with Facebook. Facebook is a perfect example. So obviously they came out with the Cambridge Analytica stuff. In this area, stock just gets hammered. So for the next few days, stock just sells off. Zuckerberg's appearing in front of Congress, things like that. But you can see right at this 150 level, it found a base. It found support. So when stocks get really oversold like this, you can buy on the weakness. This is exactly what hedge funds do. This is what institutions do. They look at it as, hey, this is still a strong company. It's still got strong fundamentals. They just handled all their bad issues, all their PR. The stock is going to rebound, especially when they have their next earnings call. It's probably going to move right back up. And look what happened. They came out and smashed earnings because, even though this PR came out, the company was still doing business all the way from here to here. So they were still, doing pretty well. And the stock had gotten hammered, in the public's eye. But, look at the huge move it made. So this is a great example of buying weakness. And somebody who's newer to trading sees this, and they see this, they don't recognize this support and this double bottom here. And they're thinking, oh man, this thing could go lower, so they're not buying it. Meanwhile, hedge funds and pro traders are just loading up. Especially if they're playing options. And they're buying, they're probably buying, the 165s, the 170 options when the stock's down here at 150 for pennies, and then just making huge bank when the stock rips back up. Who remembers? Let's see if I can get the ticker right. No, that's Express. Anyways, Experian. I'll look up their ticker while I'm talking. But who remembers Experian? They had the, or Equifax. Sorry, Equifax. Had the huge, you know, basically let all the, some 300,000 people, 150 million people's information all over the internet. EFX. You know, huge data breach, hacked. Stock just gets hammered. Stock was at 142, gets sold off all the way down to 90. But look what's happened over the past 6 months, you know, or ever since the big breach, the big sell-off. Stock found a base, slowly grinded back. Wall Street has a very short memory, and these are huge opportunities to buy, whether it's in a long-term swing account, your main account, whatever. Even the other day, we had VRX. The company is still a strong company, still strong fundamentals. A couple days ago, gets hammered with some downgrades, some PR, has a big sell-off day, gaps down, opens weak. Look what happened the next 3 days. Just rebounded. So when you're talking about strong companies that have good fundamentals, good balance sheets, you know, do the right things, these stocks are going to get bought back up. So I've even started buying these oversold weakness bounce plays. They're great opportunities. Even First Solar the other day. First Solar was getting hammered. Look, First Solar's finding a base. What do you think First Solar is going to do over the next few months? Probably go right back up to this 68 level. So, you know, there's also a story or theories out there, you know, every gap gets filled eventually, whether it's a day, a week, a month, a year, a decade, century, whatever. And look what happened. From here, this gap, from here to here, has pretty much been filled now. So it made a move from the 52 level all the way up to 80 without filling that big gap. Well, guess what? It eventually filled it. And, you know, you can't predict that stuff, but it just shows you that eventually every gap gets filled. It gapped up here, kind of filled some of this. Gapped up here, filled the gap. Gapped up, filled the gap. Went all the way up, filled the gap. So it's just stuff you learn over time. But for solar, it's going to have probably a good bounce day. It could have a really big move day. It's already getting upgrades. Red Hat the other day just had earnings on Friday. Red Hat has been defended already. You know, had bad earnings, lowered guidance, I believe. But the stock still has 170 price targets on it from analysts. Analysts came out Friday defending it. So what do you think is going to happen with Red Hat? It'll probably sell off a little bit more tomorrow on Monday. But my guess is by the end of the week, the stock's going to start rebounding right back up. It'll start moving back up towards this 164, 165 level. It may take a few months, but it could have a really nice big bounce day in it once all the sellers, everybody wants to sell has gotten out and taken their profits. But this is a great opportunity that I don't hear many people talk about, but it's out there. So just pay attention to when you get these stocks that are oversold, get hammered, and they're great to play for other bounce days. You could even talk about, what is it? The company that owns Match.com and all that. I think this is the company. But anyways, I think this was when Facebook announced they were getting into dating, online dating. Stock just tanked, got hammered, came right down to the support level, found a little base. Look what happened. Stock's already rebounded all the way back up. So hopefully I've opened your eyes to another opportunity that not many people talk about, but that's out there and something you can watch for. So it really works best when the stock gets really oversold and really hammered. But like I said, at the end of the day, it's a great company. And, you know, the more books I read, the more stories I read, this is where hedge funds capitalize. You know, a lot of the guys come in, they take over, or they try to buy a stock when it's really beaten up, it's at its lowest. I mean, you can read the story about what Bill Ackman was trying to do with JCPenney's when it was basically at the bottom. I mean, there's just so many examples of this stuff where you can really make some really nice gains off stocks that just got hammered, but still overall is good company. Another one that just recently happened in the news this last week too, Starbucks. Look what's happened to Starbucks since Wednesday or whenever they announced that they were lowering that guidance. What do you think is going to happen with Starbucks over the next 6 months? Is it going to maybe go choppy? But, well, maybe it's finding a base here at 50. And guess what? Maybe over the next weeks, months, whatever, it's going to slowly start grinding back up to this level. Now, they did just recently change their, like, some of the way they're doing things. They're recently changed their CEO, so who knows, this may actually have to go through a couple earnings calls before it did. But another great example is a company that just changed its CEO that was getting hammered. Look what CMG was doing the past couple of years. Stock was at 500. I think it was even higher at that one point. Stock just started getting hammered and hammered. Found a nice base, changed CEOs, bam, look what happened. So, you know, keep these on your radar. Pay attention to the market. Pay attention to stocks and companies that you know is still a decent company and maybe can be turned around, maybe with a new CEO or maybe just had some bad PR. But even this, I mean, you know, when it had these down days, I think this was like PR came out, some celebrity got food poisoning or something. You know, the stock takes a beating for a couple of days. But then look, it just gaps right back up and rebounds and everybody forgets about it and moves on to the next thing. We're such a microwave society. We have such a short memory, you know, so just pay attention to these. I've started to add these to my watch list, things that get way oversold, and just play the rebound. It's a great way to make easy money. And, you know, like I said, not a lot of people talk about it. And I don't think a lot of people pay attention to it or track it, but hopefully that's something you can add to your repertoire. So hopefully you enjoyed the video. Hopefully you got a couple good swing idea tips and how to identify a good overnight swing or long-term swing. If you have any questions, please let me know and stay tuned to the next one. Thanks, guys.